Yo, what's going on, everyone? Hope you're all doing well. This is my new model video. Now, I made this video about literally like 6-7 months ago, not even lying. But I've obviously clarified some more stuff, got more into the specifics of the model, and you can see that in the blue. So we're just going to get right into it. So the first aspect of my model is the high time frame PDA, the high time frame price delivery array. And I'll nearly always use a fair value gap. Now, I'm not really going to be clarifying any concepts here. You can check out my channel for that. So I'm not going to be, explaining what a fair value gap is. And then another signature piece of my model is the stop point. You can see it here, the run above this high or the run below this low. Again, not really here to clarify that. We'll go into that with the actual examples, but watch my win rate video if you're confused on what a stop point is. And then, of course, the entry confirmation is going to be that inversion. And I want my inversions having strong displacement, usually closing below or within 4 candles. You don't really want any lag or hesitation with your inversion. And then, of course, the SMT. The SMT is like the cherry on top. It's just kind of like that extra confirmation that, okay, this is manipulation, right? So like if this was, down here, an SMT like that, that'd be really good. And then, of course, A plus DOL, but that's kind of a given. Now, what did I add to my model that's now new? Well, stacking PO3. So this means stacking time discount or time premium. What I mean by this is, let's say we have a 10 a.m. open, right? 10 a.m. opens right here. We run above, right? 10 a.m. is now generating liquidity while in a time premium. But the important part is, let's say 10:15, right? So a 15-minute candle on top of the 10 a.m. candle, the 4-hour, opens, right? And we run above again. You'll see this in every single example I show you, so don't worry if you're confused right now. But notice how we run above opening price of the 10 a.m. candle, we generate liquidity, and then open another high time frame candle and again run above that opening price. So stacking the PO3, stacking time discount and premium to essentially make sure that you're in the best position of the market. Now you can also do this for like daily opens, true New York open, but I'm not really getting into that in this video. But that's what stacking PO3 is, and that'll make more sense whenever I show you all the examples. And then true manipulation. This is honestly recently defined. Now I always kind of looked for it, but recently it has really made a difference in my trading. True manipulation is whenever NASDAQ and ES both manipulate, right? So if NASDAQ goes like this, right, running into a gap, like let's say we generate all this liquidity, run into that gap, you want both pairs, right? You want ES and NQ to do this. So you want both pairs to sweep out liquidity. You want both pairs to run into that high time frame PDA in the form of a fair value gap. And of course, you can then have divergence. Like let's say you have one gap down here, right? You have that bullish gap, but then you also have another more discounted bullish gap. This is also valid, right? So ES is only going into one gap while NASDAQ dug deeper into a different one. This would just be your SMT on a higher time frame. So that's perfectly fine with me. But that is what true manipulation is, essentially when both pairs have high time frame manipulation. And another thing that I really like with this setup, and you'll again see it in all of these examples, is low time frame LR, low resistance, leading up to your high time frame DOL. So let's say that we have, previous day low right here, right? What I want to see price do, and I actually have we'll be going into the first example, have this exact framework, but you would want to see price generate low resistance at your high time frame DOL, right? So we edge this liquidity pool and then we build low resistance. And then what you could even have on top of this, right, is that opening price, you run above it and then you clear all of that out. This actually is the exact framework of what we're about to be going into. So that's what I mean by low time frame LR leading up to your high time frame DOL. And of course, this model is IRL to ERL focused, right? I'm using fair value gaps. I'm not entering off of sweeps of external highs or external lows. Instead, I'm trend trading, right? So we created a displacing leg. We retrace into the internal range liquidity pool, which is going to be that fair value gap. And then we target the external, right? Rather than going from external, targeting the internal, like a lot of y'all know with the MEC model, right? The MEC model is the opposite. MEC model is ERL to IRL focused, whereas this is the exact opposite, IRL to ERL focused. And of course, there's a continuation because, you're retracing and then expanding. So let's just get into some example number 1. Now I'm starting on the high time frame because I want to show you true manipulation first. Notice how we diverge between NASDAQ and ES and print this SMT at the high and then start respecting the aligning bias PD array in the form of this fair value gap. And also the fact that we now have a ton of low resistance liquidity, right? So one of the rules is that you want to have a high quality DOL, of course, to have that high probability in your setups. So delivering from high resistance, respecting those PD arrays, clearing out low resistance, very simple. The next thing I want you to see, and we won't really spend too much time on this, is just the fact that both NASDAQ and ES manipulate into this 15-minute fair value gap. So true manipulation is present. It's not just NASDAQ manipulating, it's actually both assets manipulating, which is what you want for the best type of setup. We can go ahead and get rid of this. Now, what actually happened on the setup itself? Well, of course, everything I just said with the trend, clearing out all of those lows, New York AM low, previous day low, below. But what on the low time frame is significant? Well, we're going to start out with PO3. What are the high time frame candles doing in alignment with the low time frame structure? Well, you can notice 1030 does what? We do print this wick lower. I don't have that drawn out, but it's because the wick lower is insignificant. It doesn't sweep out a liquidity pool. It doesn't hit a high time frame imbalance, and therefore this low isn't really significant in terms of manipulation whatsoever, even if we had the time discount. But what do we do above opening price? Well, you can see we generate that low resistance leading up to the high time frame DOL, but more importantly, we're pushing above the opening price time premium, right? And then we run into that 15-minute gap as I showed previously. So you have the IRL to ERL in the form of this external range liquidity pool as well as previous day low, and delivering to that from internal range liquidity pool being that 15-minute fair value gap, right? Also aligned with the trend. Now, what is the stacking PO3 in this scenario? Well, I would highly recommend you get this indicator. It's called the high time frame power of 3 by 2 degrees. But you can obviously see the 30-minute candle has pushed above opening price and generated low resistance liquidity. Well, what did the other PO3 do in order to stack your PO3s? If you go here, it's not as apparent, but the 15-minute candle did what? Well, again, the same thing I said about this low is the same thing I'll say about this low. It did not sweep liquidity. It did not hit an imbalance. So this low right here is insignificant. But what are we doing above opening price? What are we doing in a time premium? Well, we're actually sweeping out this high within this 15-minute fair value gap that obviously aligns with the bias as we previously covered, and in that time premium. So we've now stacked the PO3 with a 30-minute. I highly recommend you just look at this diagram. It's very, very simple, right? 1030 does what? It opens, generates liquidity. Then we make this little swing. The 15-minute candle opens, clears out that swing inside of that high time frame PD array, and then we get the inversion clearing out all of this low resistance leading up to that high time frame DOL. Now, if you would want a more dedicated video to this setup, you can go ahead and check it out. I made this recap on the Friday, December 12th, literally just 2 days prior to this video. But the important part is the inversion, right? What happens with the inversion? Well, of course, you want strong displacement. So what happens after, of course, we run above opening price, we're inside of this high time frame key level, we have the low resistance. Well, notice how we interact with a bullish gap after, hitting our bearish gap. We completely disrespect them. In a singular candle, we close below 2 bullish fair value gaps. That's exactly what you want, because what is an inversion? An inversion is the disrespect of a certain bias. Obviously, a bullish gap is going to be bullish disrespect. A bearish gap that turns into an inversion is obviously going to be bearish disrespect. So in this scenario, you can see we completely rip through those aligning bias PD arrays. That also is defending low resistance leading up to that high time frame gap. So it has everything you want. There's no real SMT in this scenario unless you want to count the high time frame. I usually like whenever we would have an SMT here, just because that's really nice. So I wouldn't really say that this setup has an SMT, but it's just present for the high time frame move and trend, which does obviously add extra, validity or just probability to the setup. But the main thing here is how we run above opening price. We generate low resistance liquidity leading up to this high time frame DOL, stack that PO3 with 1045 open, displace immediately through the gap, right? We sweep this high. The first interaction with these gaps is burning through them. That's exactly what you want. Again, reference this model. Very, very simple. You get that stop hunt as I was talking about right here. So very, very good setup. And I don't really want to dwell on this too long. Of course, I just want to go through example, show you all this stuff. If you do want to see a video completely dedicated to this, just watch my recap on December 12th, the Friday. Let's get into the next one. If you enjoy my content and want a discount on the evals that you buy or activation codes, make sure that you use code BNQ on Alpha Futures, Tradeify, and ChronosFunding. So this is example number 2, of course, starting on the high time frame because I want to show you true manipulation. Both pairs are in a high time frame PD array on the daily. We are continuing this trend. If you hop onto the 1 hour, what are we doing? Well, we're sweeping these lows inside of a daily fair value gap, and both pairs printed a 15-minute continuation, right? So we can go ahead and get rid of ES. Just know that both pairs have manipulated, so the true manipulation is appeased. Well, what is the actual setup itself? Notice that it is, continuing that internal range liquidity to rebalance and, target, or not rebalance, sorry, but to target the external range liquidity in this structure. So we'll go ahead and throw in all these, drawings. I know I just dropped a lot. But what did we do? What is the stacked PO3? Well, this is going to be a little bit of sauce with the 930. The 930 PO3 or the 930 opening price does not ever close to me, right? This is the opening of the New York session or New York AM. Obviously, like true New York open is different. But 930 you can always use as a time level, right? Like 10:15, you wouldn't really care about the 10:15 opening price, once the candle is closed, but 9:30 is a constant, right? 9:30 open will always be significant. So in this scenario, you can see we generate some liquidity up here. We have this data liquidity pool, obviously, our high time frame DOL being that external over there. But what does 1030 do? What is the stacked PO3? Now, I don't have the indicator. I wish I did. So it is a little bit harder to visualize, but 1030 opens on this candle. So 1030 opening right here does what? Well, we print that wick higher. Notice what I said in the last example, the wick higher, or in that example, the first one, we had a wick lower. It did not manipulate and it did not sweep significant liquidity. Same thing here. In fact, we actually generated liquidity. So no imbalance was hit, no sweep. There was nothing, right? Instead, we made a failure swing leading up to our DOLs, which is perfect. But instead, we ran below opening price, interacted with that 15-minute continuation, right? So from the daily gap to the 1 hour sweep to the 15-minute continuation gap with the 1030 time discount. Now we're below 930 as well. We've stacked our PD arrays. We've stacked our time openings, as well as low resistance leading up to the high time frame DOL. But then what's the final piece if we have all of that? Well, it's the inversion setup itself. Notice how we actually interact with this gap, right? So we ran into that 15-minute imbalance. We swept out that low, creating that stop hunt. But this inversion is instantaneous, the same as the last one. There's not any hesitation in the market. This inversion is not saying, oh, I don't know if I want to disrespect bearish. I don't know if I want to respect bullish. It is directly telling you that this gap is wildly insignificant and I want to run higher towards this generated liquidity, towards the external targets, towards this data high as well, continuing off of course, the daily gap, the 1 hour sweep, the 15-minute continuation. This is a perfect example. Again, reference the diagram. 930 runs lower, has that higher time frame manipulation, creates a continuation gap for us. 1030 then opens, generates more liquidity, manipulates into said continuation gap, and disrespects the inversion or the 3-minute gap perfectly, right? There's no hesitation in the market. We're running for this low resistance leading up to that high time frame DOL. We're in that higher time frame trend. IRL to ERL. We have everything here, right? Stacked PO3, low resistance, delivering from high I'm sounding like a broken record, but you get what I mean. Whenever you stack time with perfect price, you always put yourself in a position to have a high probability setup, right? It's super simple. Notice how every single recap, every single example I'm going over genuinely only takes me a few minutes, because this is how I view the market. I don't need, an hour of explanations to, show you why I took this trade. We ran lower, we manipulated, we made a continuation gap, we opened another high time frame candle after generating liquidity, we manipulated again, and we displaced again. Simple as that, right? Super, super simple. Let's get into the next example. Just want to throw this in there as well. If you want to learn directly from me, I work with PB Trading inside of their mentorship. So if you want my everyday insights, Q&As, trade reviews, stuff like that, make sure that you check out the link in the description. And it'll give you like that whole rundown. But yeah, let's get into the examples. I hope at this point y'all are kind of getting the gist of things. Again, right, ES is in a spot of distribution. We just swept out this accumulation. Same on NASDAQ, right? A little AMD into that 4-hour gap on both pairs. So ES is in a spot of distribution with obviously these targets as well. That's all you really need to know. And that's how easy true manipulation is. You know, both pairs are doing something at least. Another benefit to this that I'll just kind of pop in here is obviously the model is IRL to ERL focused, but it's really nice whenever every time frame is IRL to ERL, right? You can see on the 4-hour, internal range liquidity to external. Well, if you go on the 30-minute, it's going to be the same thing, right? Internal range liquidity up to this external, right? So you're kind of combining that on multiple time frames, and that really does benefit, obviously, the setup. But going into the framework, what do I want y'all to see? Well, obviously all of these drawings, right? So you have your high time frame PDR being that 30-minute. I wanted to put the 4-hour, but it kind of just like it didn't really look good, so I just used the 30-minute. But in terms of time, what are we doing? Well, my computer is low. Well, we are below 9:30 opening price. The manipulation occurred below 10 o'clock opening price and 10:30. So you actually have multiple, not even just 2 times stacked, you have 3 time discounts stacked, right? Below 10 o'clock, below 10:30, below 9:30 as well. But what did these PO3s do? Well, notice how 10 o'clock formed an accumulation, right? We made a swing on a swing on a swing, and then 10:30 did the same. It made a swing off of everything else. So you have generated liquidity, low resistance, leading up to, you know, of course, your high time frame DVL. And you can see this obviously play out. I'll just like do it real quick for y'all. We completely ripped through all of these targets. So very, very good setup. And we generate low resistance for this distribution. That's why I obviously love combining, you know, high time frame DOL with low resistance leading up to it, because it puts you in a very high probability scenario. And of course, you know, then you add the time discounts, the manipulation, and the inversion setup itself. What do we do with this inversion? You guys heard me say it in the previous 2 examples. I'm going to say it the same thing here. I am kind of becoming a broken record at this point. But we completely invalidate this inversion. And on top of that, we have a change in the state, right? So if an inversion is an invalidation of a certain bias, the same thing is true with the change in the state, right? You're changing the state of delivery from bearish to bullish. You're inversing a bearish gap, proving that you're bullish. You know, it's just, you know, one of the same thing. And so it is very beneficial. You know, we barely interact with the gap. There's no hesitation. We manipulate. We're printing wicks. This is a turtle soup if you're not familiar with that. And then we instantly inverse, you know, ripping up towards the higher time frame DOL, targeting these 9:30 highs, these, you know, slanted highs up here, slanted highs over here. It's such an easy trade, right? Like this should be abundantly obvious. And that's why I trade like this. Combining time with perfect price will put you in the best scenario time and time again. Little reference there with time. Anyway, I don't feel like there's much else to add to this setup. You know, like I've kind of already went over the previous 2, so I don't want to just talk y'all's ear off. But yeah, trading can be this simple, right? High time frame PDR. You wait for the time discount. You wait for the stop point. You wait for the displacement. And then you focus on the targets. What are your targets? Well, my targets are engineered liquidity on the low time frame, engineered liquidity on the high time frame, a massive trend on the higher time frame as well, you know, even above the 15-minute, leading up to all of this, right? Notice how this is a failure swing on a swing on a swing. It's the same thing. So you're actually combining the same narrative from the 4-hour to the 15-minute to the 3-minute. Your entry time frame is actually so similar to what the high time frame is doing. That's why these setups play out. And that wraps it up for the video. I really hope y'all enjoyed. I actually really like making these education content videos. So if you have any questions, let me know in the comments. I'll be happy to answer them. If you do need more clarification on the setup or the strategy, make sure you watch my backtesting. I have like 9 hours of backtesting on there that you can watch completely for free. So make sure you check that out. And yeah, I'll catch you on the next video. Use code BNQ, bro.